Since the beginning of the trading day, the euro has been confidently gaining in value. However, the rise could hardly offset the previous slump. Thus, the current increase could be explained by a local rebound after a significant drop. The pound sterling is showing the same dynamic. However, the situation was affected by the EUROZONE industrial production report that should have unveiled a slowdown. Thus, the indicator slumped more than expected, displaying a drop of -2%. Notably, the previous data was upwardly revised to a decline of -0.5%. However, this information only aggravated the situation. In fact, there is another reason for the appreciation in the euro and the pound sterling. The US is going to disclose its retail sales report. According to the forecast, the indicator's growth may slacken to 7.1% from 8.2%. Such a sharp decrease in consumer activity points to higher risks of the economic recession. In addition, inflation continues growing, thus destroying the US economy. The services sector is the most damaged one, since it directly depends on consumer activity. It's no secret that high inflation makes people poorer. If the situation remains the same, consumer activity will go on falling very fast, thus causing bankruptcy of many companies from the services sector. Nevertheless, once the Fed publishes its meeting results, the euro and the pound sterling will slide to yesterday's lows. The key interest rate hike to 1.75% from 1% is a considerable change. Most traders have already priced in the decision, thus causing a jump in the US dollar recorded in the previous 2 days. That's why now the greenback has no room to rise. However, monetary policy tightening will hardly lead to a drop in the national currency. Let's take a look at the trading charts. The euro-dollar pair began falling slower near the level of 1.0400. Although this auction caused a sideways movement and the bearish sentiment is still in force, the price stagnation between the levels of 1.04 and 1.05 may attract spectaculars' attention for some time. It's quite possible that the current pause in the accumulation process ahead of the acceleration. Under the current conditions, traders should use the strategy based on the ongoing impulse that will indicate a further price direction. Buy orders could be initiated if the price consolidates above 1.05 on the 4-hour chart, and traders may consider short positions if the price settles below 1.04 on the same time frame. Meanwhile, a decline in the pound-dollar pair accelerated after the prolongation of the midterm downtrend. A rise in the volume of short positions led to a drop in the British pound towards the psychological level of 1.20. In the last 3 days, the pair lost about 550 pips, and the psychological area between 1.1950, 1.20 and 1.2050 is exerting pressure on sellers. As a result, the volume of short positions fell, thus spurring a local rebound. Since the pound sterling is overbought, the correction may last only until the main economic event of this trading day. However, the pair may resume falling if it settles below 1.1950 on the 4-hour chart. How is trading going to unfold in the short term? We will definitely tell you in our next video reviews. Don't miss them and stay up to date with the latest market news. See you!